Central banks are buying gold at levels not seen since 1967. So central banks buying record amounts of gold in the third quarter, and large chunks are from unknown buyers. Gold purchases from central banks reached a record during the last quarter, revealed the World Gold Council's quarterly report. But the caveat was that the big players remain anonymous. A total of nearly 400 tonnes was bought by central banks in the third quarter, most on record. This also marks a 300% jump from the same period a year ago, World Gold Council said in its Gold Demand Trends report released Tuesday. Year to date, central banks bought 673 tonnes, more than any other annual total since 1967, when the US dollar was still backed by gold. Turkey, Uzbekistan, and Qatar emerged as the biggest known buyers, but there was still a sizable unknown contingent. The level of official sector demand in the third quarter is a combination of steady reported purchases by central banks and a substantial estimate for unreported buying, World Gold Council's report pointed out. Countries known for not reporting their gold purchases regularly include China and Russia. And people are asking the question, what about the US? But Lobo Tigre says here, as I've said before, central banks, watch what they do, not what they say. And I've said that over and over again on this channel as well. So let's have a look at what some other people are saying and commenting about this. Jim Rickards, Americans may not be buying gold, but central banks are buying all they can get. Maybe they know something others don't. Maybe it's the Armageddon thing Biden is pushing. Anyway, they're ready for what comes next. And here's Krishan from the World Gold Council. Here are the top line numbers for the third quarter from their demands trend report. So, yeah, it's a good graphic of what central banks have been buying. That ETF rubbish down the bottom. Now, even one of my favorite modern Austrian economists, Per Bylen, commented on it. Barbarous relic, a central bank that is good point, Per. And yeah, he's commenting on this. And yeah, if gold was such a relic, why are central banks buying it? Why are they buying it? And here's Jesse Felder. Almost 400 tons of gold was scooped up by central banks in the third quarter, more than quadruple the amount a year earlier. That takes the total so far this year to the highest since 1967, when the dollar was still backed by the metal, which we've just discussed. So here's a good chart showing that. Once again, why are central banks buying gold? Well, Simon Mikhailovich puts it this way: the arsonist can smell fire ahead for everyone. No wonder central banks are rushing to load up on gold, even as investors keep trading financial claims. Good point, Simon. And here, Reuters are just reporting of the record central bank buying of gold. Doesn't that look pretty? It looks so nice, doesn't it? And Eddie Spence reports central bank's extraordinary report from At Gold implies that there was a massive amount of gold buying by central banks over the summer. The issue is we don't know which ones. Well, yeah, and that is a question. Obviously, people are saying, well, Russia and China are the obvious ones because they don't report. But could the US have been buying and not wanting to report either? That's a big question. And James Anderson, central banks backing armoured trucks up for gold bullion on spot price dip, 55-year high amount, basically since the last gold price rigging fell apart. So it's interesting. As the gold price has gone down, central banks have been loading up. What have we been talking about on this channel for a while? And Luke Roman, central banks bought a record amount of gold last quarter as they diversified foreign exchange reserves, with a large chunk of the purchases coming from as yet unknown buyers. Almost 400 tons were scooped up by central banks in the third quarter, more than quadruple the amount a year earlier. Yet while all this has gone on and central banks have been buying, Jesse Felder reports this from this Wall Street Journal article. The gold fell for its 7th straight month in October. That is a record losing streak not seen since 1869. So I did this video, Silver and Gold to the Moon, when this happens, not too long ago, actually. Last month I did this video. And Jim Bianco has a good argument, which is something I've been talking about and argued for a long time, about gold. So what I want to do is just cut to a 2-minute clip from this video and listen to Jim Bianco.
Jim, as I listen to what you're describing, what you say is ahead, it seems to me that everything the gold bugs ever told me was going to drive the price of gold bullion up to $5,000 or $10,000 an ounce either already happened, in most cases it already did, or it ought to be coming real soon based on what you're talking about. But price of bullion is really not going anyplace. Up a little bit in the last week, but still floundering, I would say, given everything that's going on geopolitically. Does gold just not work the way we were told it was supposed to work, or what's going on here?
Single most frustrating market to me has been the precious metals markets. Just to underscore what you said, everything Peter Schiff ever wanted in life has occurred in the last 6 months. He's right. Everything he said was going to occur that was going to be bullish for gold, it has occurred. It has. I'm not trying to criticize him.
Well, the other way to look at it, you could reframe it as every single thing Peter Schiff ever predicted would send the price of gold to the moon all turned out to be wrong.
Right, because all the things that he predicted that would send it to the moon, and it hasn't. So what I say when I say I'm frustrated about it is I would have a year or two ago agreed with him. If A, B, C, and D and E happen, like you said, price of precious metals would go up, and A, B, C, D, and half of E have happened. And the price of precious metals have done nothing. And it's been very frustrating to try and figure out what it is that the market needs or wants. Now, the best argument I could give you is to why precious metals aren't moving is why do we own gold or silver in the first place? It's kind of a derivative of the crypto markets, right? It's a way to get your money out of the financial system with, or away from the financial system. So if there's a problem in the financial system, inflation, deflation, financial crisis, here's an asset that would be immune from it. But what have we done to precious metals over the last 30 years or 20 years is we financialized the hell out of them through derivatives, through ETFs, through futures, and everything else, so that if there is a problem in the financial system, then, if the financial system catches a cold, gold and silver get pneumonia anyway. So all of a sudden, if they're not going to be immune, the financial system's got problems. Maybe the problems are inflation. Maybe the problems are a crisis like 2008. Then gold or silver should benefit because they're not part of the system. No, they are part of the system. They're squarely ensconced in the system. The biggest way that everybody, I've had this argument countless times with people. Yeah, I like gold. I just bought GLD. Why? Because I'm worried about the financial system. You think GLD is going to survive if we have a problem with the financial system? It's just going to be a worthless piece of paper. But you haven't gone and you haven't bought gold coins and put them in a safe deposit box. Oh, that's too hard. I don't understand how to do it. But not enough people have done that. So what we've done is we've financialized this system to such a degree it can't escape the thing that it's supposed to benefit from, and that is problems within the financial system itself. That's the best answer I could give you, because otherwise I agree everything that is happening should be bullish for precious metals, but yet they're not going anywhere.
So late last year, I did this video, Return of the Gold Standard. And once again, I'll put a link in the description below to the video that I did with the clip with Jim Bianco. I'll put a link in the description below to this video if you haven't watched it. In this video, Jim Rickards argues that it's China, the big central banks that want to accumulate gold, have been artificially suppressing the paper price to accumulate as much of it as possible. And then at some point, when the system cracks, and have a look around the world at the moment, Look at the bond markets, look at the gilts, pension funds, financial institutions. If you guys watched Bloomberg last week, you would have seen Hugh Hendry on there basically saying what Tom Luongo has been saying, and that the euro dollar is blowing up as we speak. If you understand the euro dollar system, you'll understand that our monetary system is on the precipice of collapsing. And what are central banks doing? They're buying gold. They're not buying paper gold. They're not buying ETFs or futures contracts. They're buying physical gold, and they're holding physical gold. And this is what I'm a big proponent of. You want these metals. Go study monetary history. Whenever currencies collapse, whenever fiat currencies collapse, always ends up going back to our gold or silver standard. And so, in my opinion, you just want to own some physical for that particular purpose. And we are on the verge of this current monetary system imploding. And it's why in my insiders group, our subscribers, I'm sharing with them how I'm investing and why I'm holding. Pretty much my main three assets right now are cash, gold, and silver, physical gold and silver. And then I've got particular stocks in particular asset classes that I'm holding. But my main three holdings are cash, gold, and silver. And I'll be deploying the cash very soon. But I've got the gold and silver for when this monetary system ends, and it will end. So Jim makes some good points in this video. And what I've argued is become your own central bank. You can trade your fiat currency. You can create more cash flow by using a strategy where we sell options and use that cash flow to accumulate physical gold and silver. Become your own central bank. I'll put a link in the description below to this video as well if you haven't yet watched it. But this is what I do. And if you guys want to find out more and join our insiders subscription, it's an annual subscription, weekly report, and I just share my portfolio, what I'm holding, what I'm selling, what I'm buying. You guys get that in the weekly report. My last report, I think I noted, or it was the one before that, I noted that we sold some covered calls on a stock that we owned and took some pretty juicy premiums. And what do? I went down and bought some physical silver coins with it. Pretty cool. Become your own central bank. So if you guys want to join the insiders group and subscribe to that, then send me an email to the email address below on the screen. It is $365 US for an annual subscription. So if you're interested, send me an email. I'll get back to you with some details and next steps, and join the others in the insiders group and seeing what we invest in. Once again, it's not financial advice, and we don't recommend anyone buy or sell any particular asset or security, but it's just an insider's view into how I invest and the assets that I'm holding. So become your own central bank. Follow what the central banks do. Follow what they do, not what they say. I keep saying. Anyway, guys, if you like this video, do us a favor and hit that like button. Give us that thumbs up. Really do appreciate it. Love to see your thoughts and opinions in the comments below. Take care, everyone. I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.